Hello, everyone. In this session, we're going to talk about the business tax. And today, we're going to talk about the Financial Act 21. That means it will cover the AQA 22 syllabus. So that's our new syllabus. So we're going to do FA21. That's Financial Act 21 for the new syllabus, that is Q 2022. So if you look at the assessment information, so it is more or less the same story that we have done on Financial Act 2020. There are a few new additions with the rules we have for the Financial Act, especially for the national insurance contribution, for the personal tax threshold, for the sole trader income threshold. So there are a little bit changes, but not much. So hopefully, like if you practice enough, this exam will be not very difficult. Only the one thing you have to remember, this exam could be a little bit time pressure you will face on the exam because you have to answer 11 questions, so 11 tasks in 2 hours. That's the only challenge you're going to face. You have to answer 11 questions and you have only 2 hours. The first thing you have to remember, you need to score only 70%. So you need to make sure first you secure your 70%. Then you look for any additional marks in the exam. So you need to know what question will be on which number. For example, question number 1 will be from the adjustment for the corporation tax. Question number 2 will be from our capital allowance. Question number 3 from the basis period. So this sort of thing you have to know, because in the exam, you will know exactly what question you're going to do first and what question you're going to do last. So especially the writing task, I always recommend my student to do later on. So you leave the writing task for the last question. The reason is, if, for example, there's a writing task for 10 marks and you have only 5 minutes to do, so even in 5 minutes, you will be able to write something. Even if you're running out of time, you still will get some marks from the writing question. But if you lose the marks on the calculation question, what will happen? You'll not be able to complete that question and you'll lose the whole marks. So try to make your plan, which question you do first and which question you do second, third. So you have to know your plan before you go to the exam center. The next important point you have to remember, the exam will give us some reference material that will be on the right corner. And obviously, like the task you can see here, as soon as we start the question, then the assessment will give us some reference material. And so many students, that depends on the reference material in the exam. Do not do that, because if you already know some question will be in the exam, and if you know the threshold, if you know the answer, do not think I'm going to read from the reference material, because it will be time consuming and you will be running out of time in the exam. So try to be less dependent on the reference material. The question, which will be part of the writing, you can see here, this says your result will not take into account the response to tasks 2, 6, 9, and 10. That means with this practice assessment will not cover tasks 2, 6, 9, and 10. The reason is, in this question, there will be a little bit writing task. And the writing task is always marked by the examiner. So the writing task will be always marked by the human, not by the computer. So it is assessment from the AAT website. So there is no examiner there to mark for it. So this 4 tasks will not be considered. Other than rest of the information we have, it is more or less same for all the AAT exam. All right, so let's start with our assessment. Let's have a look what we have. So once you have this information, all you have to do, you have to click continue, and it will take us to the first question. As we said, on the right corner, we have index. Index will give us how many questions we have. We can jump on the task from task 1 to task 11. Also, you can highlight an information if you like. And also we can clear the highlight. And the final thing, we have a reference material. The reference material will give us every single chapter: income tax, national insurance, capital gain tax. If you click any of the reference material, you're going to see the rate. Now, for example, the annual exemption rate is 12,300 for the capital gain tax. The basic rate is 10%. The higher rate is 20%. And if any asset eligible for business asset disposal relief, it is 10%. And the maximum relief is 1 million. So this information we already have on the reference material, but doesn't mean you have to read it on the reference material. Very careful. Don't waste too much time on the reference material, because you can see your time will be running out here. So if you keep reading the reference material, you will be running out of time in the final exam. So try to be less dependent and try to remember these all rules and the formulas so that you will be less dependent on the exam day. All right, let's read our first task, task 1 for 8 marks. Now, as I said, the first question will be from the adjustment for the corporation tax. So on the book, we'll have a table. This table will tell us which allowable expense we have for the corporation tax adjustment, which one is not allowable expenditure. So it's very important to identify some expense is allowable expenditure, some expense is not allowable expenditure. And you try to remember it, because in the exam, we need to know what it is. And also we need to remember a few things, especially like when you do the adjustment, some of the basic entry will be always there. For example, the depreciation. You will definitely get the depreciation on the exam. And the depreciation is a non-cash item. So it's a non-cash item. And because of the depreciation, there is no actual cash outflow from the business. So depreciation is the reduction of the non-current asset. Now, you need to ask yourself, like, why the depreciation? We need to add it back. So it's very important. If you understand the logic, you will remember it for long. For example, let's say depreciation we claim as expense. And the depreciation is the part of our accrual concept. Now, when you prepare the accounts or limited company accounts, we prepare the accounts based on the accrual concept. And now, according to the accrual concept or matching concept, we match the transaction. And when we calculate the tax, it has to be some adjustment before we actually calculate how much is the tax. Now, if you look at our accounts, we can see our net profit is 217. Now, does it mean we're going to calculate the corporation tax 19% on this amount? The answer is no. This is the profit from accounts. And my actual profit, where I'm going to calculate the tax, is not same. Why is not same? Because some of the adjustment we do according to the accrual concept, this is not allowable for the tax purpose. For example, the depreciation. Now, depreciation is the reduction of the value of the non-current asset, NCA. So when you have NCA, non-current asset, we minus the depreciation and we reduce the value of the non-current asset. Now, when you have a non-current asset, the company get capital allowance for the capital expenditure. So any sort of capital expenditure, company receive the capital allowance. Now, if we claim the capital allowance, and if you minus the depreciation as expense, so actually we do it double, we count it double. So you cannot do that. So if the company said, if the HMRC said like, how much you spend on the non-current asset, you can claim as a capital allowance, you can minus the capital allowance, it will reduce your profit. Now, if I have a capital allowance that I claim on the non-current asset, that is our WD allowance, for example, FY allowance or first year allowance, whatever it is, all the allowance we have, we claim on the non-current asset. Now, if we claim that on the non-current asset, and also if we claim the depreciation as expense, so actually we minus the expense twice. For that reason, we have to add back this depreciation with that. Also, we have a few more rules. For example, if we look at this one, repair and maintenance. Now, repair and maintenance is allowable expenditure if it is for the ongoing asset. Now, if it is for the new asset, then it is a part of capital expenditure. For example, let's say you buy a computer, and in this computer, you have to install some software, or you have to hire an engineer who's going to fix the computer for you. So if we need to spend any money to bring the asset into the location, or for the installation, or to make the asset ready to use, we have to take this cost as a part of the capital expenditure. So for example, if my computer cost is £500, and if I paid another £50 to the engineer, so my computer cost will be 550, not 500. So it is a part of capital expenditure. So capital expenditure, I cannot take as a revenue expenditure on the profit and loss account. For that reason, I will not be able to claim the expense, if anything relevant to the new asset. Then we have the sales and marketing. So we need to look at what information we have for the sales and marketing, because it says the note. Then you have admin, legal and professional, motors, all this information we have as an expense. Now, if anything that is not allowable expenditure, we need to add it back. For that reason, we have to read the other part of the question. So let's read this question a little bit quickly. So first we can see our turnover, sale, cost of sales, gross profit. We have all the expense. That's my total expense. That gives me the total profit. Now I need to know how much tax I'm going to pay. How much will be the taxable profit? Remember that net profit doesn't mean taxable profit. Taxable profit is all about where I'm going to multiply 19% corporation tax. So with the net profit, I'm going to start with the net profit, and I'm going to adjust all the allowable and disallowable expenditure, and I'll end up with the taxable profit. So let's have a look at the other part of the question before we discuss more. So in the additional information has been provided, we can see here repair and maintenance include repair and maintenance. So repair made to the new asset. Remember that as soon as you see the word new asset, that means it is a part of the capital expenditure. So you have to add it back. So we have this were necessary to bring it into condition. So the cost is 3,000. So this 3,000 is not allowable expenditure. So with the net profit, I have to add it back. So you say add back, because 3,000 is a part of capital expenditure. The replacement of all the window in the main office. The old window were wooden single glazed, and the new windows are aluminum double glazed, cost 18,000. Now, if there is a replacement, but not the improvement, then it is allowable expenditure. So we said we don't have to do anything, it is allowable. Remember that if there is improvement, for example, if the asset, if you have for example, a flat or a house that was before 2-bedroom, and now you make it 3-bedroom. So basically you make some improvement, and because of the improvement, the value of the asset goes up. If this is the case, it will be capital expenditure and it will be not allowable. But a replacement normally is allowable expenditure. Sales and marketing include 1,800 on a staff party. No problem, staff party is allowable. Don't worry about the staff party. Staff party, how much it is always allowable. Client gift, it is not allowable, it is taxable. So 2,000 you need to add back. Add back. Any gift to the client or entertaining the client is never allowable. Remember that. So you need to make sure we add back the client gift. Motor expense, 2,000 lease cost for a car, CO2 emission 45 gram. The car is used 50% personal by the sales director, and the sales director is the employee. So if the employee use the car, obviously it is a allowable expenditure. But remember, this is very important. The CO2 emission 45 gram. It is, if it is more than 50 gram, then there is a restriction of the 15%. So make sure you read the whole story from the table of the allowable expenditure for the lease cost. So now it is less than 50 gram. So you can take all the 2000 as allowable expenditure, but in the exam, you might have more than 50 grams. You have to know the whole rules, not only what you're practicing from here. Speeding and parking fine 2400 incurred by the sales director while on business journey. Doesn't matter your business journey or personal journey. If there is a fine or penalty, it is not allowable expenditure. So 2400 we have to add back. So if we have any sort of fine or penalty, even from HMRC, from anyone, it is not allowable expenditure. Capital allowance have been calculated, 5,300. This one is very simple. We need to minus from the total profit. That means it will reduce my profit. So take away from the profit. So take away from the profit, less from the profit. Capital allowance always reduce my profit. And that's why we add back the depreciation, because later on we will minus the capital allowance. All right, so now we have our story. Now we can go back and complete our question. So once you have finalized what will be added, what will be deducted, and you can end up with your profit. So we'll start with our net profit. So you're going to say accounting profit. Accounting profit. That is 217,742. And we need to see which one we need to add back. The first thing we'll add back the depreciation. And depreciation 2156. Then we have repair to new asset. Repair new asset. We need to add back that 3,000. Then we have a client gift. Client gift. We'll add back 2,000. And finally have a fine, the penalty. 2,400 we add back. And the last thing we have to do, have to take away less the capital allowance. This is 5,300. And that's it. This will be my taxable profit. 221,998. And in this amount, you have to calculate the corporation tax, 19%. The question only asks us to find it out. How much is the taxable profit? This is the taxable profit. This will be your first question in the exam. So you need to make sure you score 8 marks. It will not take a long time if you know what to add, what to deduct. Now, for example, when you do the question, let's say, for example, if you've done only one mistake, for example, the fine, you don't know what to do. Even if you're wrong one entry, you will lose only 1 marks. So don't think like, okay, I don't know one thing, I'll lose the whole marks. Don't worry about that. You will have a marks for every single separate entry. So don't waste too much time if you don't remember one entry. So you can always move to the next one. And later on, if you have a time, you can always come back. All right, let's have a look at our next question, tax 2. This question is all about the capital allowance. So let's have a look. Robert is a sole trader and run a manufacturing businesses. On 1st July 2020, he had the following brought forward tax return down value. So it's a balance BD or opening balance. So opening balance. When you read the question, you exactly know what to do and how to do. And that's how you can make the answer really fast in the exam. So general pool with opening balance, we have general pool 86,742. Then we have a robot car, 24,382. So this is our opening balance. Now, the robot car, we can see we have some more information. Robot car had a CO2 emission, 170 gram. and had 45% of the personal use. If we have a personal use, we need to take this one for the private use asset. So this car we take for the private use asset. During the year ended 30 June 2021, the following transaction took place. So addition after the opening balance, what we have here, 1st January 21, we have an electric car that is 45% personal use by the robot. Okay, so remember that electric car is eligible for FYA allowance, first year allowance, and that is 100%. But here we have 45% of the personal use. That means 55% we're going to claim as allowance. On this amount, 32,800, we have to find it out how much is the 55% for the business use, and we can claim the full allowance on that amount. 14th of March 2021, plant. Remember that plant is always eligible for AIA, that is annual investment amount, and we have a maximum threshold. The amount is 1 million. So if we buy the plant more than 1 million, then you have to find the difference. Other than less than 1 million, we can always take the 100% allowance for that. 15 June 2021, car CO2 emission 82 gram and 65% personal use by the James, the production manager. So this is used by the employee. This car is used by the employee, but we can see the CO2 emission is more than 50 gram. So if the CO2 emission is more than 50 gram, this will go for the special rate pool. Remember that. So if the car have a more than 50 gram and used by the employee, that will be the special rate pool. Now the special rate pool is the allowance we're going to calculate only 6%. Normally with the general pool, the allowance is 18%, that is WDA, written down allowance. But with the special pool, the rate is 6%. One thing you have to remember, the FYA, the WDA, and the special rate, all these three, we have to be time apportioned. So for example, if the year is less than 12 months or more than 12 months, if the asset is more than used more than 12 months or less than 12 months. So based on the year, you have to do the time apportion. But only the FYA, did I write FYA here? So it should be AIA. So here you need to do the time apportion for this AIA, WDA, and special rate. But only for the FYA, we do not do time apportion. So even though the asset we buy at the end of the year and just use for a few months, still we can claim 100%. The others, we have to look at how long is the counting period, and we need to use the time apportion. So be careful with that. All right, so this is our story. Let's read a little bit under what information we have on the bottom. So the next section we have for the disposal, that means we have sold some asset. The first thing we have sold a plant, and we sold it for 8,600. That's from the general pool. And the next one we have sold the robot car. That car we have with the private use. So this car we sold it for 12,900. When we sell any specific asset, that asset was used for a private use purpose or for a special rate, not in the general pool. If we sell any specific asset, then either this asset will create the balancing charge or the balancing allowance. Now, if the asset cost is more than the disposal value, for example, if the asset cost is 10,000 and we sold it, for example, for 5,000, then the difference 5,000 will create the allowance because we sold less than the cost price. If it is opposite, if the cost was 5,000 and you sold it for 10,000, then it will create 5,000, the balancing charge. That means you have to pay more tax on this. So allowance will reduce your tax and the charge will increase your tax. In the exam, we'll have this column, AIA, FYA, general pool, special rate, private use asset, and total allowance. We have to complete this table. They give us the opening balance, tax written down value, brought forward. They give us the general pool and private use. Now we have to do the addition and the disposal to complete this table. So let's try to do it. We already know all the information. Now we're going to complete the question. In this question, we have a few information about how to find it out the tax year, and also we have to calculate the overlap profit, and also need to have some MCQ type question as well. So let's have a look. The first thing we need to know, read the question very well to understand and do some markings. This task is about the business period rules. So the basis period rules actually. Rupert started a trading 1st of July. So business started 1st of July 2021. That's the starting date of the business. Preparing his first set of accounts to 31st of May 2022. There's the first set of account up to May. His taxable profit have been for the period ended. That's the period ended till 31st of May. From July to May, we need to look at how many months is here. So July to May is 11 months. So in 11 months, we have a profit 32,067. After that, we have a period and again 31st of May. That means from June to May, June 22 to May 23, we have 48,000. Okay. Complete the following statement. Rupert first tax year of trade will be what year? Now to find it out, this one is very simple. The day we started the business from 1st of July 21, we have to stop next year 5th of April. So 5th of April 2022. So always remember the day we have started the business, from that we have to keep going until we stop 5th of April 2022. It could be any year, but we stop on the following April, 5th of April. 5th of April represent up to 31st of March. So you really don't have to consider 5 days. So it's just up to 5th of April is the tax year, but we'll stop when there's a 31st of March. So here you can see how many months here. July to 31st of March is 9 months. So this is my first year. Now the tax year always started from 6th April to 5th April. So which tax year it is? Tax year. Now we can look at the tax year always, as I said, like 6th April to 5th April. So if you look at it started from July 21, that means from 6th April 21, I've already started for 21 and 22, because 21 and 22 means 6th of April 21 to 5th of April 22. That's my tax year 21, 22. So I'm between this period. So July means 21 is already started. 21 is started from 6th of July. So if I start my trading on 1st of July, after 6th of April, that means I fall on the tax year 21 and 22. Even if I started August, September, October, November, December, it doesn't matter because that's my period from 6th July 21 to 5th July 22. Between this period, anytime I start my business, I'll fall in tax year 21 and 22. So this will be tax year 21 and 22. The next question is asking, calculate the amount Rupert will include as a trading income in his first year and the second year of trading. State your answer to the nearest pound, so you don't have to make the pence, just the nearest pound. The first tax year is very simple. It started from 1st of July. So 1st of July 21 to 5th of April 22. This is my first tax year. And the profit I have here from July to May for 11 months, it is 32,667. So 32,667 for the 11 months. So you need to look at how many months I have for the first tax year. That is 21, 22. So I have a 9-month here. So you need to find it out. 32,667 divided by 11, because this one represents total 11-month profit. July to May is 11 months. So you need 9 months because my tax year will be ended on 5th of April. That means 31st of March actually, times by 9. So that will give me 32,667 divide 11 times by 9, 26,727. 26,727.5. So we'll make 28. So you say 26,728. The next one, we have a second tax year. The second tax year is, it depends what is the situation. So if my first period of accounts is a less than 12 months, on the second tax year, I'll take the first 12 months. So that means the day I started the business from 1st of July 21, and I will stop after the first 12 months. That means I'll carry on July to June. So it's the 30th of June 22, first 12 month. First 12 month. Make sure you revise the basis period rules very well. In the exam, that could be another one can come. So you need to make sure you know all the rules. As the first period of accounts is less than 12 months, it's only 11 months, July to May. So I took the first 12 months for the next year, for the next tax year. So I already have 11-month profit. So for the 11-month profit, I have 32,667. And I need one more month from the next year, from 48,000. So 48,973 is for 12 months. So I need one more month from there. So divide by 12, it will give me per month 48,973 divided by 12. So I have 4081. So I need to just add with that. So I have this one for 32,667 for 11 months plus 4081 for 1 month. So 11 months plus 1 month, and that will give me the first 12 month. 32,667. That is 36,748. So 36,748. So that's my second tax year. First 12 month, the day I start the business. The next question asking overlap profit. Overlap profit. Now you can see here, the first 9 months I'm calculating from July to 31st of March, that is 5th of April. And again, I started from 1st of July. That means this 9 month is completely overlap. So that means this 26,728 is already inside of the second tax year because I started my second tax year from July to June. From July to May, July to April, 5th of April, or July to March, this 9 month is already inside on the next tax year. So this is my overlap profit, 26,728. That's my first overlap profit. Then I need to look at my next year, that is third tax year, is very important to find it out what is the overlap profit. Now my third tax year, you can see my period is ended 31st of May. And the third tax year, the way I do the day my period is ended 31st of May. From there, I have to go back 12 months. So that means I will have 31st of May 23, and I'll go back, and that will be June 22 to 31st of May. That means 12 months here. So my first tax year, you can see here 21 and 22, second tax year 22, 23, and the final tax year is 23 and 24. Because when I'm in June, that means I'm already in 23. It will finish on 24. So here I have the profit, that is 48,973. Now, as I discussed before, this is already inside of the second tax year. The first year is already inside of the next year. So the second year from July to June. And the third year is from June to May. Now that means on the second year, I already have a June. We finish in 30th of June. And this June come back again on the third tax year. That means inside of this 1 month, I already counted on the second tax year. So I need to find it out. How much is the 1 month? 48,973 divided by 12. We have the same figure. You see that? So this one you need to add 4081, as this is the overlap profit. So whatever we have here, also this one. So that will give me 26,728 plus 4081, 30,809. That's my overlap profit. 20,809. Overlap profit is all about, is there any profit we counted twice? But make sure you revise well. Overlap profit can be very tricky in the exam if you don't have enough preparation. All right, let's move to the next one. Next question we have for the true and false. Let's quickly do that. Identify whether the following statement are true or false. If Rupert has a loss in his final period of trade, overlap profit from commencement will make the loss smaller. That's not true. Remember that. Overlap profit always increase the loss, not decrease. Overlap profit always increase the loss, not decrease. The next one, it says, if Rupert had chosen a period and 30th of April, he would have less overlap profit. That's not true. If you choose the period of 5th of April, then there will be impact on the first year. There will be like easy to calculate and carry on for the basis period. But at the end, if there is an overlap profit because of the chosen accounting period, it will not helpful, because obviously if you started your business in July, obviously if you finish or if you start on September, if you finish in April, then when it's the next year, you have to start from the July. So it will be overlap profit anyway, unless you start your business exactly from April to March. If you follow the tax year, exactly that day you start your business, then there will be no overlap profit. Otherwise, if you start your business on the first year, if it is less than 12 months, so next second year, you calculate again 12 months. So it will not bring any difference for the overlap profit. So also, this is also false. All right, let's move to the next one. This question we have from the partnership, and we have 8 marks for this question. This task is about analyzing profit and loss of a partnership and calculating national insurance contribution. This task contains part A to B. So let's read this question. So we have Dino, Danny, and Jake have been in a partnership for several years. On 31st of October 2021, Jake left the partnership. Remember, as soon as you see someone is left or someone is joined, you need to make sure you stop there. So from that time, you have to have a new calculation. So till the person left, or if any person joined on that day, you have to stop. You have to end your calculation. And from there, you have to start again. For example, if you have a 12-month period and someone left after 6 months, and someone joined after 6 months. So you'll have a first calculation up to 6 months, and the next calculation will be for the next 6 months or even after 9 months. So you have to stop someone leave or someone join. There will be new workings from that time. So you need to make sure like you understand it. So when someone joined or someone left, we'll have a 2 period. So if the question give us the profit for the whole year, for example, for the 12 month, you have to split the profit. If the question give us the salary, you have to split the salary. If the question give us the interest, we need to split the interest for 2 periods. The profit for the year ended 31st of January was 87,800. So this profit you have to split. We have to stop on 31st of October because Jake is left. The partnership profit is shared as follow. Each partner annual salary 24,000. Salary need to be split because Jake left, so you need to have a 2 calculation. Dino has the return on capital 2%, so his capital investment 10,000, 2% is the interest. Profit was shared equally among the partner until 31st of October. So until Jake left the partnership, the profit was shared equally. Profit are shared ratio 80-20 between Dino and Danny. So after Jake left, Dino and Danny was taking 80% and 20% from 1st of November till January. So you need to calculate from February to October and then November to January. So you have a 2 period. All right, so they already give us the template and we can calculate all of this. You need to remember the profit 87,800, salary 24,000, 2% interest on capital on 10,000. That's it. So let's move on. So first thing we do the salary. The salary they already done for us for the period to October. So if the year is ended on 31st of January, that means the first period will be from February to 31st of October. Here the Jake is leaving. So this period will be for Dino, Danny, and Jake. And the next period from November to Jan, it will be only for Dino and Danny. So nothing will be for the Jake because Jake is left this period, it will be empty. So let's have a look. Salary is already given, interest on capital already given, profit share. So how much was the profit you need to look at, and you need to split the profit. Now, obviously, like we need to find it out, the total profit, and we need to look at how much is the period here. So February to October. So how many months we have here? So February, March, April, May, June, July, August, September, October. So 9 months. 9 months we have here. So total profit was 87,800 for the whole year. So you have a 9 month. So divide by 12 times by 9. And for the 9 month, the profit is 65,850. And from here into minus the salary. So minus the salary 54,000. Minus the interest on capital 150. And the remaining profit we have to split. So you have a remaining profit 11,700. And this 11,700 you have to split between all this partner equally. That is Dino, Danny, and Jake. So divide by 3, it was equal before. So it will be 3,900, 3,900 and 3,900. So I say 3,900, 3,900 and 3,900, and the total left profit is 11,700. And this figure will be changed after. Okay, from the January to November to January, so for the 3 month, so we have 87,800, 12 times by 3, and that will give us the left profit, that is 21,950. This 21,950 we have to minus our salary and interest the way we did before. So salary was 24,000 for whole year. For the 9 month it was 18. That means for the 3 month it will be 6,000. So 6,000 for Dino, 6,000 for Danny. Jack is left after October, so Jack will not get anything. So 12,000 is the salary. Then interest on capital, 10%. So 10% on 10,000. So 10% on 10,000. So that will give us so we have here, so 2%, isn't it? 2%. So 10,000, 2% was 200. So 200 for the whole year. And we already minus 150 for the 9 months. So you have 50 left. So this 50 only will get Dino. So Dino will get interest on capital, 50. And I think that's it. So after that, we need to minus the salary, that is 12,000. And the 50 is the interest on capital, the way we did before, same story. And now we'll see how much profit we have left for distribution. So we have a profit 9,900. And this 9,900, 80% will receive by Dino, 20% by Danny. 20% by Danny. So 80% by Dino, 20% by Danny. So 9,900, 80% give me 13,970. And 20% give me 7,980. So it's a profit 13,970 and 7,980. Total 9,950 here, and that will give us the total 87,800 total. It's quite simple. You just need to look at when the person left, and you need to know how to do the split. Nothing else. It's not difficult at all. All right, let's move to the next one. The next question we have about the national insurance. You will have one question in the exam for the national insurance, so you need to make sure you memorize the formulas for the national insurance. So Blake has assessable trading profit from his sole trader business, 56,000 in 21-22. He also has income from employment, 14,000. Remember that don't do anything with the employment, because the employment tax and the national insurance is paid deducted at source. So you already paid through your employment. So do not have to include this figure when you calculate the trading profit from the sole trader. Calculate the Blake class 4 national insurance contribution. So they're only asking for the class 4 national insurance contribution. They can also ask in the exam for the class 2. Class 2. The class 2 is quite simple. Remember that class 2, if the trading profit is more than 6,515, then they have to pay £3.05 per week. So you need to just multiply with 52 weeks if the business is running for 52 weeks. If the business is closed or is stopped after 20 or 30 weeks, you only calculate for 20 or 30 weeks. Do not give the whole year national insurance. The class 4, also simple, it's not very difficult. The threshold is 9568. 9568. So if it is more than 9568 and the higher threshold is 50 to 70, 50 to 70. So between 9568 and 50 to 70, the rate is 9%. And if the profit, trading profit more than 50 to 70, the difference between these two will be 2%. So we have here 56,000. So 56,000 minus 50 to 70. Here I need to calculate 2%. That's it. So let's do that. So we have here 50,000 to 70 minus 9568 times by 2%. Times by 9%, sorry. So we'll have 50,000 to 70 minus 9568 times by 9%. And that will give me 3663.18. So 3663.18. That's for the 9% one. 3663.18. And the next one we have here, class 4, 2%. The difference between these two. So 56,000 minus 50,000 to 70 times by 2%. That is 114.60. 114.60, and that will give you a total 37778. So this question quite is straightforward, and you will get a very easy 2 marks if you know these formulas. All right, let's move to the next one. Let's read this question. This question for the 6 marks, and we have from the chargeable gain. This task is about chargeable gain and allowable losses of companies. We have a question A and B. C Limited has disposed some machinery during the year ended 31st of August 21. The machinery cost 87,000 in January 2013. The cost of the machine is 87,000 in January 2013. C Limited had to pay legal fee 890. Remember, if you buy something, if you have to pay the legal fee, it will be added with that. So 8,700 plus 890. So it will be the acquisition cost on purchase of the machinery. In January 2018, C Limited spent 3,000 on improvement to the machine to make it more efficient. So 3,000 is the improvement expenditure. This is also capital expenditure. It is allowable. In December 2020, C Limited spent 800 replacing a broken switch on the machine. So this is a revenue expenditure. Revenue expenditure, we cannot take it. You have to ignore that. It was sold for 103 and legal fee was 486. So we need to see how much you sold it for. We sold it for 103, and you have to minus 486 because this is a legal fee we paid. Let's have a look how much is the actual proceed. And indexation from January to December. Remember that indexation is stopped in December 2017. In the exam, they might give you additional indexation like 2018, 19, 20. Do not take it. Remember this one is very important because indexation, they will give you more. You have to know you have to stop in December 17 because it freeze on December 17. Calculate the chargeable gain. So we need to calculate the chargeable gain. So we are not calculating the taxable gain. We are calculating the chargeable gain. Remember, this sort of word could be very tricky in the exam. So the proceed, we have 103 is the proceed minus the legal fee, 486. So you can write it down here, 103,000. And the selling expense, 486. It will be minus. Then you have a cost including the acquisition. So you have 87,000 plus 890. So it will be 87,000. 890. Enhancement expenditure, this only have 3000. The improvement, do not take the revenue expenditure. Indexation will be only on the acquisition, remember that. So 87,890 times 0.131, and that will give you how much? 87,890 times 0.131, 11,514. So it will reduce your gain 11,514, and the gain will be 110. So you can see the 3000 improvement we have done on December 2020, but we know our indexation is stopped December 17. So after December 17, there is no indexation. In the exam, they might give you the indexation for the improvement, but do not use it if it is after December 17. If it is before December 17, make sure you use it, because you can use the indexation on the enhancement expenditure or improvement. All right, so let's move to the next one. Next question we have here, just for 1 marks, it's a true and false question. Identify which one of the statement is true. To qualify for a rollover relief, both assets sold and the asset both must be the building. It's not necessary, it don't have to be building. It could be any asset. If the asset is qualified, then you can claim the rollover relief. The gain will be deferred for future period, but it's not like only have to be a building. To qualify for rollover relief, the new asset must be brought no more than 3 years, but before the sale of the old asset. That's not true. So you can have an asset, obviously, like for the rollover relief, you can have an asset and you don't have to sell it for within 3 years. So the qualify for the rollover relief, the new asset must be brought no more than 3 years before the sale. There is 2 options. Either you can buy before 2 years or like 3 years after. So it's not the right one. Rollover relief is restricted if the amount is spent on the new asset exceed the proceeds received on the sale on the asset. This is not true as well. So for example, if you sell the asset and if you spend half of the money, then you can only roll over the gain for that half. You will not be able to use all the gain to be deferred. So the question said rollover relief is restricted if the amount is spent on the new asset exceed the proceed received on the old asset. Now, for example, if you sell the old asset for 10,000 and if you buy the new asset for 15,000, is okay. The problem is only if you sell it for 10,000, but if you spend only 5,000. So on this another 5,000, you have to pay the tax. Rollover relief is restricted if the asset sold is partially used for the non-trade purpose. That's true. If the asset you use for the non-trade purpose or not for the business purpose, and then you cannot claim the rollover relief. So you need to make sure like you revise this relief. In the exam, you will have definitely question from the business asset disposal relief or rollover relief. So you need to make sure you revise all these things. All right, so we'll stop here today, and hopefully on the next session, on the part 2, we're going to look at maybe some more question in future. So hopefully this video will be helpful for you. If you have any question, you can email me. I have my email address on the description. Thank you very much for watching.